What if I told you that most people are taught to invest backwards? That chasing appreciation, the price going up, this is what keeps everyday Americans stressed, over-leveraged, and dependent on timing the market, while the wealthiest individuals focus on something completely different. They don't ask, "What's the price?" They ask, "What does this asset pay me?" Today, we're going to challenge the status quo, not just in investing, but in how people think about wealth, ownership, and financial independence. This episode is about cash flow first investing. Why appreciation is the bonus, not the goal. Because in real life, during volatility, recessions, and uncertainty, cash flow is what keeps you solvent, and solvency is what keeps you in the game long enough to win. Welcome to Corporate Citizens LLC. We are a full-service accounting and finance firm that helps everyday Americans make the transition from employee to employer and onward to investor, while learning how to access many of the same tax, legal, and structural advantages used by Fortune 500 companies that legally pay little to nothing in taxes. We don't just talk theory, we focus on real-world structures, real-world cash flow, and real-world outcomes. Most people are taught to invest by watching a screen. If the number goes up, they feel wealthy. If the number goes down, they panic. But here's the problem. Price doesn't pay your bills. You can't live off appreciation unless you sell something. And selling means shrinking your ownership. That's not income, that's liquidation. Cash flow investors don't obsess over price because price is temporary. Income is durable. Think about how farmers invest. They don't buy farmland hoping to flip it next year. They buy land because it produces something every single year. If the value of the land drops on paper, they don't panic, because the crops still grow, the livestock still produces, and the income still comes in. That mindset applies directly to cash flow investing. You hold assets for what they produce, not just what someone else might pay later. Markets go through cycles, interest rates rise, recessions happen, but during volatility, dividends don't stop. Rental income doesn't disappear overnight. Interest payments continue. Royalties keep paying. The number on a screen may drop, but the cash keeps flowing. That's the difference between investors who survive downturns and those who are forced out. Cash flow shows up in many forms. Dividends from businesses, rental income from real estate or vehicles, interest from private lending, royalties from intellectual property, option premiums from selling puts and calls. Each one creates income without requiring you to sell your ownership. Appreciation can amplify wealth, but cash flow sustains it. This ties into what we at Corporate Citizens LLC call dividend relevance theory. In textbooks, dividends are often treated as irrelevant. In real life, dividends reinvested increase ownership, stability, and discipline. Ownership grows, income grows, behavior improves, and behavior, more than theory, determines outcomes. If your goal is to make the transition from employee to employer, you have to stop thinking like a spectator and start thinking like an owner. Owners don't chase hype. Owners build systems that pay them whether markets are calm or chaotic. Cash flow first investing allows you to stay solvent during downturns, reduce forced selling, sleep better at night, build durable wealth over time. Appreciation is exciting, but cash flow is what changes lives. Price is what you see, ownership is what you have, cash flow is what you keep, and compounding ownership over time is what allows everyday Americans to build real, lasting wealth. If you found this helpful, please like, comment, subscribe, and hit the bell icon so you don't miss our weekly insights on business, tax, finance, investing, and legal strategy. To learn more or get personalized guidance, visit becomeacorporatecitizen.com or call 516-476-8204 to speak with a professional. The information provided in this video is for general informational and educational purposes only and does not constitute legal, tax, or financial advice. Every situation is unique. Please consult a qualified professional for guidance specific to your circumstances.